All right, good morning, everybody. Welcome to this Monday market breakdown. As always, this is Christian Tharp, chartered market technician with T3 and trade editor for Primetime Options Gambit, coach and mentor for the Lifetime Trading System. Let's get into it. We came into this week expecting the market move lower. S&P, NASDAQ putting in some bearish-looking days on Friday. What I will tell you is when we thought we would start the week off lower, we didn't necessarily mean this much lower. So nice little 2% on the S&P, NASDAQ taking some hits big time. NASDAQ futures were down as much as 5% overnight. So it's not too often. As of late, we've seen the futures down 1,000 points, but that's where we were. So I guess we were kind of right. Market moving lower. So big question, where do we go from here? As I was just discussing in one of my one of my trade service webinars, let's look at the S&P here. Okay, S&P is very good when it comes to patterns that it's created, channels, consolidations. Very, very good at doing exactly what it says it's going to do. So a little bit difficult to see, but like you can kind of see this channel here in the green that's trending up. Once we broke out of the bottom of it, right? Confirmation of something worse. If you look at the orange here, this is a rising wedge. Okay, see right through here. Implies a breakdown. Once we did, down we went. Here's another channel you can see in the light green, just kind of going up through here. Once we broke, down we went, so forth and so on. All 2 weeks ago, we had forecasted a break to the upside and probable new highs based on this bullish pattern. Sure enough, we broke to the upside and we hit new highs. Okay, so with that understanding that this isn't voodoo, that the S&P is very good at forecasting things, I want you to look at this larger channel. Okay, you'll see right here, whatever you want to call this color, light pink, tan, something. Okay, tested multiple times on the top side. Here's your on the bottom side. Very well-defined channel. All right, so the point I'm getting to is if you look, a lot of pops and drops all the way through here, but it's all been contained within this channel. So we look at this drop and ask ourselves, did anything major happen here that we should be alarmed about? No. Okay. Could it be the start of something? Because after all big moves start small. Sure. Okay. But remember, the last time we had a drop like this was back here. Some of you may have been trading. Okay. This was back in August, beginning of August. Nice little doozy of a drop. If we freaked out and just ran around buying puts with our hair on fire, right? All we did was just explode in our face. So I wouldn't make a big deal out of it. Trading this move this morning, I think we want to capture the volatility. So something we do a lot of is we're hedging and being on both sides of the trades. Really helps us specifically when the market is volatile like this. So that's kind of how we're going to handle not only today, but the rest of the week, and wouldn't really make much of this drop until it maybe morphs into something bigger. If it does. We know at some point we're breaking out of this channel. If it's whether or not it's now, meh. All right, so we'd still kind of keep looking for breakouts and breaks. This was our trade from last week in options gambit. Again, very, very simple stuff. Number one, numero uno lesson I try to teach all my students: keep it simple. You've been duped, right? You've been duped. Okay, you don't need 10 indicators. You don't need 6. You don't need 27. You don't need moving averages. You don't need Bollinger Bands or VWAP or any of that nonsense per se. Okay, and by that I don't mean it's nonsense. I mean the idea that that's going to save your trading is a farce. Okay, number one, got to get those fundamentals down. As long as you're implementing good position size, risk management, taking advantage of good risk reward setups, then are you disciplined enough to keep the risk and the reward where you set it? You're going to make money. All right. All the other stuff, moot point, with the exception of price, because last time I checked, price is the only thing that pays you. Okay. Price. So we want to focus here. And that's all we're doing, right? Amazon had the same wedge type formation. This is a bullish setup, and it's just price, folks. Just price. So once we popped to the upside, we bought calls. Nice little 200%er for us. Easy peasy, right? So look for like simple setups. Look for simple trades, okay? Right now, red asphalt, blood on the highway, but try to find stocks breaking down, breaking higher. And again, might not be an easy thing. And certainly this morning's price action throws us for a loop, especially if we go to the space that's taking the hits. But Look right here. Look where Broadcom is finding support right now. Okay, I don't know that I would have thrown this Hail Mary right then, but look, right where we might expect it to, at the top of the window or the bottom, right, of the gap up. Okay, if this holds and you end up with a day that looks like this, let's get some calls. Some good things might be happening. All right, so I wouldn't, don't overcomplicate things. There are some spots of green running around, a stock that we've been talking about, and we've already traded once. It's 3M. We've been waiting for it to get to now. Look at this 150 level. That's a level I've had highlighted since way before this year. And look where we stalled. 1, 2, 3, 4. Today sure looks like the day. We traded this on the breakthrough 135. Important level. Pretty easy to see, right? Break through it. Let's buy some calls. Where do we expect to go? Next level up, 140. Great. Easy peasy. Okay, a couple 100% there to be made. Now we don't stay in over earnings. Okay, but our next trade was can we take out 150? Well, I'd watch this stock today. Looks like it might be trying to do that. If it holds, sure looks like higher's coming. Okay, so look for the simple stuff. Don't overcomplicate things. Trading is hard enough as it is. All right, so without overcomplicating it with 27 different indicators that some dude on X told you to use. Okay, so so don't be afraid to sit on your hands. See how this thing shakes out. If you're going to be in there, maybe play both sides of it. It's not a bad idea. Or be patient and see if some breakouts like this will hold. All right. So until next week, we'll update it then. Good luck in the trading.